Thank you for joining us again. We had a show today, Business Journey, and we were talking about accounting and taxes. We want to go into a few more details. We're going to do that on the Atlas Spotlight. So you know Lonnie and you know Cheryl, and I'm Melody. We're going to jump into a few things. When you are starting a business, Lonnie, what is it that we need to pay attention to? What do we need to set up from an accounting and tax perspective?
Well, it all starts with the organizational structure of the entity. So you set up an entity, which is the first forming of that entity, and then you select what type of entity you would have. And there's a variety of different types of entities from both a legal perspective, which we would have our attorney talk to you about, and a taxing perspective. So Cheryl, what entity did you select?
Well, it's interesting. We've changed since we started. So we started out as an LLC, then discovered that in order to do business in Canada, we had to be a C Corp. So that changed. So we formed then a C Corp. And, as I mentioned earlier in another conversation, it's still, as we expand, a question each and every day. Because every country we expand to has different corporate structures that they require, etc. In the early days, it was also a matter of fundraising. There's so many things that come into such a simple question about what kind of structure do you have, right? So they can change during the year. So we started as an LLC. We are now a C Corp, and I'm not sure what will be in the future.
And it's very interesting. We get this question a lot about an LLC versus a corporation. Yeah. And those are there's a partnership also that you could select. An LLC in the state of Colorado and in most other states can be taxed as several different types of entities, and that tax is a separate election.
Yes.
Okay, so people ask me, should I be an LLC or an S Corp? My answer is you can be an LLC and make the election to be an S corporation, because they hear a lot about S corporation. Mm-hmm. With an LLC, you can even elect to be a C corporation, which the difference between the two, a C corporation pays its own tax. As S corporation, a partnership passes that income through to the shareholders or the members of that entity. So there's a lot that goes into that. I think the first thing is to form that organization, whatever you select, and there's tax implications and there's legal implications that you should have your counselors involved with. The other thing is then you take it to the next step. Whichever entity you form, there's underlying corporate documents that you want to have. Like, for example, with your LLC, you probably had an operating agreement. And you want to get a federal ID number, which is also different than for each different type of entity. So, and then if you're going to have things like payroll, you want to have all the payroll set up at the state level. So there's steps that go through, and we talked, Cheryl, at one point in time about this wonderful checklist that you didn't have, that you want to create now for other entrepreneurs.
Please, yes.
And we have things like that you can find on our website that helps a new business start up and helps somebody go through this process that you actually tried to experience probably on your own.
Mm-hmm. So let's go through. I just want to make sure that everybody in our audience understands when you first start a business, you need to figure out what your legal structure is. Consult with an attorney. There's great information online. It does affect your taxes, so how you set up. But you also have to have a legal entity to open a bank account.
Correct.
If you do not have a legal entity, then you cannot open a business bank account. And the other thing, like with limited liability, it creates a separation from you as an individual by having your business structure. So figure out your structure is what I heard. The other thing that I've heard is you have to get your federal ID.
Right.
If you're going to have employees, you absolutely need to have an employee identification number, and you get that from the IRS. So you need to make sure that you have that. Okay, so we also talked earlier on the show, so in terms of setup with payroll, right, as far as our base checklist. What are other things in your setup? Because I think about accounting and I think about accounts payable, accounts receivable. So where do I go? I've got my business, I've got my EIN, now what?
So a lot of times then it starts with that structure of your accounting system. So you select the accounting system, and then you also need to look at your chart of accounts, and you look at your underlying systems that are within that accounting system, like accounts payable. And a lot of softwares today have an accounts payable application. or they have an accounts receivable application, or both, and you have to set those up also to be able to track your clients and track your vendors. So if you use QuickBooks, within QuickBooks, there's a lot of applications that are available to be able to help create that structure.
Yeah, and can I also mention too? Take a step back when you're talking about the EIN. I'd like to mention one of the things that I, as a new entrepreneur coming out, you can say EIN. EIN now brings with it 3 or 4 other things you need to do. So I went in and I said, I got to get an EIN. I got it. It was easy. And then all of a sudden I found, but you got to create an account for your unemployment insurance. You got to create an account for all this. So it's all of these little steps that it's very important to work with someone. Because again, as entrepreneurs, as heads of companies, we look at big pictures. So we said, we need to set up our business, and we do one form, and then we forget about all the others. So it's really important, I think, to look at all of the details around it. And if you're not good at it, please get help with it, because it's one of the things that can consume and take a lot of your time if you don't set it up right from the beginning.
Well, and we've helped clients after the fact. So you say get some help, and there's a lot of clients that do understand this, but just to get very specific, like Melody said, the EIN, the Federal Identification Number, is actually obtained through the IRS, and you can do that actually through the IRS website. Then when you go deeper, for payroll, you have to also apply for state numbers, state identification numbers. And then you go deeper with the state, which takes time. All of this stuff doesn't happen overnight. So planning as much as you can in advance before you have that first paycheck is going to be very important.
You know, I always go back to being in your business and working on it. You need to have the time to get all of this in order. Open a bank account. Get the checks. How are you going to pay people?
Right.
You know, I'm sitting there and thinking about this when you're setting it up. Would you share with our audience what's the difference between a cash basis and accrual basis, where you have to make choices because it affects your cash flow. The way you're setting up your system affects your report. So what's the difference between cash and accrual, Lonnie?
The biggest thing is that if you really look at cash, which most of us operate from, and we talked about this earlier about how you're operating from cash, it is really the cash coming in and the cash going out. And that's what it gets reflected on the financial statements. That's why they call it cash basis. On accrual basis, the only thing that's different is the timing of maybe the revenue. Instead of when the cash comes in, it's actually when you bill the customer before the cash comes in, so you have accounts receivable. Same way with accounts payable. It's actually recording it when you have the first invoice as opposed to when you cut the check.
Right.
And a cash to accrual is very important from a tax standpoint also. And a lot of times if you just look at the businesses in general, the IRS makes some requirements of certain businesses to be on an accrual basis versus a cash basis. Most people want to be on a cash basis because they can control it better or they understand it better. But the IRS says if you have inventory, significant inventory, or if you have significant accounts receivable, then they may require you to be on an accrual basis.
And you know, that's something that's very difficult, say in a company like mine, right? Because hearing you say that, my assumption is then I need to mix them, right? Because on the equipment side of things, I have an accrual-based, potentially inventory that goes from year to year, right? I might sell a project in 1 year that doesn't actually get the money collected till the next year. On the other hand, on the consulting, the services that we offer is really more cash-based, traditionally speaking, right? So question to you is, can you mix those? Does it have to be one or the other? And how do you join something that is really cash-based and yet you have that accrual aspect to parts of your business?
Well, in general terms, that's an election that's made for the entity as a whole.
Okay.
So that's where we were talking about all your you have different services and products. You have a mix of a product and a service business. And you have to understand that from how do you measure the ending results? Because long-term contracts generally say that you should be on an accrual basis. Again, inventory and receivables generally say you should be on an accrual basis. You'd have to also then do that for your service side of the business too. It's one election, unless you have 2 different companies.
Okay. And by the way, I think part of considering 2 different companies in this instance, not just for tax basis or your financials, but the way you provide service is different than the way you provide product. And what you may find is that you have some operating norms that say I should have a consulting business that goes with my product business, and that you do form two different entities. So something for you to think about, but it's not just on the financials.
Right.
You should be thinking about it and your operations and what is producing the best result for your customers and you.
But I think, Melody, you mentioned something about the chart of accounts. I think you talked earlier about, and the how do you set that up? Well, within certain systems like a QuickBooks, you can have divisions, or you can have departments, which does that they can track your service consulting business apart from your product business.
Right. And that's how we're doing it at the moment. Yeah.
Right. Right. So it's important that you do track that, like we talked earlier, because there's different key performance indicators that would be for your service business as opposed to your product business. But I think it is important that when you first start up, one of the things that you need to do is sit down and really look at your chart of accounts and make sure your chart of accounts does fit with your business plan, with your big picture, with your various other things, so that you can easily, from the historical financial statements, measure that.
By the way, though, I think you just brought something up that a lot of business owners, when they first start, they don't necessarily pay attention to. They give it to someone. They may have a bookkeeper, somebody else who's handling it. They may have an advisor like Atlas that's coming in. Although I know at Atlas, we're going to get you involved. But the situation that you have, it's really important, your chart of accounts. Your chart of accounts, it creates the foundation for the reports that you get as the business owner to understand where your business is at. Is this product making money? Am I making money? Am I paying in a timely fashion? Are my customers paying in a timely fashion? And one of the things that I think is interesting is a lot of businesses struggle with what should their chart of accounts be, and some of them overcomplicate it and some of them oversimplify it. So share with us a little bit of that process, Lonnie, if you would.
Well, it's very interesting because in a lot of these accounting packages, they have standard chart of accounts that you could set up or you could utilize. I would caution on that only because, like you said, it's going to be something that's a canned package or a canned chart of accounts. And you should really understand it because the reports that you get out of there are going to be dependent on it.
Right.
And it's also, if you don't understand the divisional aspect or the departmental aspect of some of these packages, you really need to, if you have the two lines of businesses that you have, so that you're putting your right costs in the right division. And your chart of accounts need to be set up in that manner also. And I think that when you get to that, then what the end result is are your financial statements.
Right.
Your historical financial statements. And I don't know if everybody completely understands the three basic ones that we look at, but let me go over that a little bit. We have the balance sheet, which a balance sheet is just a look at one point in time of your assets and your liabilities, and your assets minus your liabilities is your equity. The P&L income statement, people refer to it a lot as a P&L, profit and loss statement, or the income statement, is actually tracking transactions over a period of time. So it's your revenue coming in over a period of time and your expenses coming over a period of time to see if you have a net income or net loss at the bottom line. The third critical statement is your statement of cash flow. And that really combines the two, but it is still over a period of time. So it's a period of time of what's happened to your cash. I have received cash from customers. I have spent that cash on paying accounts payable. I have spent that cash on buying equipment. I've spent that cash on paying loans. So it puts that all on one sheet of paper so you can see what's happened to your cash. Which it does seem like it's, that's always, people talk about that one, the third statement. It's actually the most important one.
It is absolutely the most. And the other one that I've seen that a lot of businesses do, they consider cash flow only against the P&L. And they do not bring in accounts from their balance sheet. They don't even think about it. And all of a sudden, those become the gotchas.
Right.
So those are the three. So really and truly, as a business owner, what we're saying today, you have to pay attention to how you're setting up your accounting system because it affects your reporting and how you get to understand where your business is at. And on cash flow, depending on the source, 70 to 82% of businesses fail because of cash flow.
Right.
So just so you know, that truly is the number one reason that businesses do not succeed.
And it's, I think if you're not looking at that, you're missing opportunities for how to improve your revenue stream, right? Because if you're not looking at all of those things comparatively, you can identify opportunities that you're perhaps completely overlooking,
Right.
that could be revenue sources or that are draining your company.
Exactly.
You know, I know in previous lives, in looking at things, the implementation side of things isn't always counted as a potential profit area, right? It's just a drain on the sale of a particular
Right.
product, etc. And so I think it's really important. I don't know that that people really understand that the financial aspects, which seem very detailed and number oriented, are actually really informing the decisions you're making in your business and how to grow and where to put your money and where to find it. I would much rather find an efficiency in a in a balance sheet than by firing an employee, right?
Right.
So you can look at those areas, and I think they're really important, and I think they're often overlooked.
Well, I think that there's some big concepts that tie this together a little bit. Melody, you said earlier that people look at their cash flow from the P&L. And I think it's important to understand, because we've had lots of questions from owners that basically says, well, I just made $10,000, but where's my cash?
Right.
And they didn't realize that they spent $5,000 on purchase of a new computer.
That's right.
And $5,000 paying off a loan.
Right.
Which doesn't show up on your profit
That's
and loss.
right.
Very important. And I think the other thing, when you look at the big picture, you were mentioning this, Cheryl, earlier, you're looking at performance. Now, I would caution everybody to understand that the balance sheet, the profit and loss, the statement of cash flow, generally are historical in nature. Okay, but what you do is you use that to build your daily reporting mechanisms, because it shows you, okay, today I've just done X. Well, and X is going to translate to Y on my P&L.
Right.
And that's the important thing, is to go through that process and don't stop just on the historical. The other thing that I think is very, very important is the timeliness of financial statements. If you're waiting several months to get a P&L or a balance sheet, you've missed opportunities
Right.
that you'll never have back.
Right.
So you've got to make sure that you are getting these financial statements out timely. And I understand that people need days to get closed at month ends. I get that part of it. But if your processes are set up daily to accumulate the information, like you get your billing done, like you enter your invoices, various other things to get the information in timely, then the financial statements are very easy.
Right. Yeah.
So by the way, on the spotlight, because at Atlas we're all about doing, right? So our doings, I'm actually gonna suggest that we do just a quick review, and come back and share of your accounts.
Okay.
How you set up your bookkeeping, I think would be a really good thing, and see if we have any recommendations to come through for you, because you actually embody both. And for wrapping up our spotlight, is there any other point, being the business owner that you've gone through this journey, that you want to make sure everybody in our audience knows?
Yeah, I would say, don't be afraid. One of the things, lessons learned, don't be afraid to ask for help and ask for explanations. I think a lot of times business owners think, well, if I show a vulnerability that I don't understand a financial statement or whatever, it's killing your business to live in ignorance of that. That would be the first thing I would say. The second thing I would say is that what I have learned is there is a difference. This may sound very naive, but there is a difference between bookkeeping and financials. They're two different words for a
That's
reason.
correct.
Because bookkeeping is really just, as you said, tracking in and out. And it's really just, what is the check I wrote? Financials, to me, is really taking that information from bookkeeping and strategizing and learning how to grow your business through that information that it's given you. And I think it's really important, and I think a lot of CEOs kind of say, oh, financials, I don't want to deal with that. I'll just get my CEO to explain what is that bottom line.
Yeah.
No, it's important to know the ins and outs of everything you're doing, because like I said, it can kill your business if you are overlooking an opportunity that eventually, puts you in the red.
Those are two great comments. I'd like to share a couple things.
Okay.
The first, going to your second point of the bookkeeping versus the financials. Bookkeeping is your standard operating procedures. The reality of you have those so that the process happens automatically almost.
Right.
That it's the same thing. Then you get to look at what did that accumulate, and that's your financials. And I think
Yes.
that's extremely important to understand what you said. there's a process to get the information in there, and then you evaluate the financials that are generated
Yes.
on a timely basis.
Booking is SOPs, financials are strategy.
Perfect.
Then there's second point, which I think is very important because I want to share a quick story. I've been with clients before, and the clients have said, they haven't asked a question. And I asked them after the fact, why didn't you ask that question before? Because they realize it after the fact. And what they say is, well, I didn't want to act ignorant.
Right.
I did not want to act stupid. And what I say at our business is there isn't really a stupid question.
Right.
There isn't a question
Right.
that shouldn't go unanswered, because
Right.
just because you're dealing with a professional that actually does understand it on a daily basis, they work on it on a daily basis.
Right.
And I would say from our perspective, we don't do what you do on a daily basis. So we may ask you some stupid questions, or we may ask you some questions that don't really relate to something, and you just have to tell us, well, that's not necessarily related to this. Same way here.
Right.
But you should ask for explanation, the why. If you don't do that, then I think you've missed out on a big opportunity to use the consultant, the advisor that you have in front of you.
Completely agree. Completely agree. Yeah.
Great points, fantastic points. And one other one I'm going to impose on you guys, because we are taking a journey, and part of us taking this journey, we are going to identify different things along the way. I would love for us to come back and do a show about funding, because you got to have money.
Please.
And there are different ways that you can go about doing that. So I would love us to do that, and Lonnie, I would love for you to come back and be our advisor for that show as well. So.
Yeah,
Very
that would be
important.
great. I think that's one of the biggest challenges. I think that all entrepreneurs.
Well, and it's interesting because there's different ways, especially in your industry, to get funding,
That's right.
which can be very expensive. And then there's a whole control factor. This is your idea. Do you want control? Do you want to give up control?
Right.
So there's a lot of ways to get funding, and there's a lot of ways that could affect your financials.
Exactly. Fantastic. Well, thank you both for today. And Lonnie, do you have any closing thoughts for us on this spotlight?
I think the biggest thing, as we were talking about, is to look at structure, like we talked at the beginning, and then to follow that all the way through to your financial information. And the idea would be to try to make it simple, keep it simple, but yet keep it very effective. And don't just assume that somebody else has that as an entrepreneur.
Fantastic. Thank you again for joining us for the Spotlight. And on behalf of Atlas, here's wishing you more business and life success.